before to define that, we have certain words need to be known. One is consideration. Consideration here means whatever the supply of goods or services are being, or both, which is being rendered, for which a payment has been made, or a money, or an otherwise, in response or the inducement of the supply of goods or services, anything which is paid. That means a recipient might be receiving something from the other person, then it is called as a consideration. And subsidy, it may not include the subsidy which is given by the either a state government or a central government. Like for a gas cylinder, if you take into the account, whatever the payment we are making to the distributor, that is called as a consideration. But whatever the subsidy which is received from the government cannot be called as a consideration at all. The next, they say the monetary value in respect of or inducement or the supply of goods or services or both, anything which has been taken into the consideration, that will be called as a consideration. The next, we have to discuss about the goods. What do you mean by the goods? Probably you might have studied the definition of the goods. Once again, before we have to determine the value of supply of goods or services, we need to know what do you mean by the goods. The goods here, every kind of movable property other than money or securities, but includes actionable claims, growing crops, grass, things attached to or forming a part of the land, which are agreed to be served before supply or under a contract of supply. So always you have to see to it that the supply, the goods, whatever the goods which are being supplied, you have to define whether they are movable or not. Movable goods only comes under the Act. Immovable goods cannot be considered to evaluate the value under the Act. Now, here, one more thing which they have stated about is money, securities, actionable claims, money and securities does not called as a goods, whereas actionable claims, growing crops, grass, things, all that, unless until it is cut from the earth. If it is cut from the earth, they are called as goods. If it is attached to the land, then it cannot be called as a goods. So that is the reason why you have to define what is the goods. The next, when we talk about the value, market value can be treated or taken as a basis to evaluate the value here. Then in such a case, what do you mean by a market value? The market value shall mean a full amount which a recipient of a supply is required to pay in order to obtain the goods or services or a both. Market value can be full payment, full amount which a recipient is required to pay to obtain the goods or services, all kind or quality, at or about the same time, same commercial level, where the recipient and the suppliers are not related. That means both the parties, buyer and the seller, should not be related. Now, what do you mean by money then? When we say money, money means any Indian legal tender or a foreign currency or a check or a promissory note, bill of exchange, letter of credit, draft, pay order, traveler's check, money order, postal or electronic remittance, or any other instrument recognized by the Reserve Bank of India when used as a consideration to settle an obligation or exchange with the Indian legal tender of another denomination, but shall not include any currency that is held for its numeristic value. So that's the reason why here they say Indian legal tender is eligible foreign currency, check, promissory note, bill of exchange, letter of credit, draft, pay order, traveler's check, money order, postal or electronic remittance, any other instrument as recognized by RBI. All this comes under the meaning of money. Now, coming to the person. The person includes an individual or a HUF, that is Hindu undivided family, or a company or a firm, a limited liability partnership, an association of persons, a body of individuals, whether incorporated or not, in India or outside the India, any corporation established under the Central Act or the State Act, any body corporate incorporated under any of the laws of the country outside India, cooperative society registered under the law relating to cooperative societies, a local authority, a central government or a state government, society as defined under the Securities Registration Act, trust, every artificial judicial person not falling within the any of the above, all these comes under the person, because we have to define who are the person. Taking the person as a base, you may be determining the value of the supply. So that's the reason why the person definition of the person is also important. The next here we have to talk about the recipient of supply. Who is called as a recipient of supply? Where a consideration is payable for the supply of goods or services or both, the person who is liable to pay the consideration will be called as a recipient supply of goods. No consideration is payable for the supply of goods. The person to whom the goods are delivered or whom the possession or the use of the goods is given or made available. Now, where no consideration is payable for the supply of service, the person to whom the service is being rendered. Now, all this, if you take into the account, you will call that person as a recipient of supply of goods. Now, coming to the services, you know very well what do you mean by the services. Anything other than goods, money or the securities, but includes activities relating to the use of money or its conversion by cash or by any other mode or from any form, currency or denomination, or any other form, currency or denomination for which a separate consideration is charged. So, services which are being rendered, and in the services, you should not include money or securities. Other than that, all the other activities can be included in the supply. In the service. Now, coming to the supplier in relation to goods or services or both shall mean a person who is supplying the said goods or services or both shall include an agent acting such as. So in such a case, who is called as an agent? That also you have to know. Now, first of all, we say that agent means a person including a factor, broker, commission agent, a Delcrader agent, or an auctioneer, or any other mercantile agent, by whatever the name called, who may be carrying the business on behalf of his principal, or supplying the goods, or the receipt of the goods or services, or on behalf of another, he may be called as an agent. Now, because all these are important, why? Because either the principal or the agent may be doing the business on behalf of so and so owner, then even that is also to be considered for the determination of the value. That is the reason why you have to take into the account all those things. So now we have seen what are the things need to be considered for the determination of value of supply. Now coming to the definition of assessable value or a transaction value. So here the transaction value means a value of supply of goods or services or both shall be the transaction value, which is the price actually paid or payable for the said supply of goods or services or both, where the supplier and the recipient of the supplier are not related. The price is the sole consideration of the supply. Now, when we are seeing this definition into the account, here, one thing which you have to note is, one is transaction value. We are talking about the transaction value or the assessable value which we are supposed to determine under the value of supply of goods or services. The second one, what we have to take into the consideration is a supplier. Who is called as a supplier? Supplier means a person who is supplying the goods or a services or a both. He may be an agent also by whatever the name, or on whom behalf he is working also, that is also to be considered. So here the definition of the supplier need to be considered. The next, the recipient of the supplier. Who is called as a recipient of the supplier? That means whoever is receiving the goods on consideration, then he will be called as a recipient of supplier. So here the definition of the recipient of supplier is also need to be considered. The next, they say they are not related. That means here master and servant relationship, if it is existing. So any sale which is taken place between a master and servant, that means employer and employee. The difference, what is the employer and employee? Both of them are working together. So whatever may be the transaction which is taken place between these two cannot be treated as a sale at all or a supply, which cannot be considered for the valuation of the supply. So master and servant relationship should not be exist, or one of the person should not be a director, or this person may be director in my company and I may be director in their company. That means we may have a business deals. We may have any other like sort of business related connections. In such cases, they are called as a related person. So here the definition of related person is also need to be considered here, and see to it that both the parties should not be related. That means legally and business purpose also they should not consider each other. That's the reason why in the definition they have stated that they are not related. And the price is the sole consideration of the supply. Sole consideration means a reasonable price as it fetched in the market need to be considered. Like we were purchasing the goods from the person to whom we know, and probably they may be related, a blood relation is there. So he may be selling for outsider has 100 rupees and he may be selling for us 80 rupees. So for the valuation of the supply, he should not consider 80 because that 80 was given because he think that we are the kith and kin of that person. That's the reason why he has reduced the amount, and that amount, whatever is reduced, should not be considered. Why? Because for an outsider is selling the same product at 100 rupees. So even though it is sold to us for 80, but for the valuation purposes, he has to take 100 rupees only as a basis. Provided if we show 100, but he has paid to us only 80, that means we have paid to him as 80 and he got only 80 rupees per unit. But how can he charge for 100? Because see, whatever may be the price which he has showed at a lesser one, it should not be considered. Whatever the price that would fetch in the market, that should be considered for the determination of value of supply. This is called as a reasonable consideration or a sole consideration for the supply. Now, this is what we have to consider into the account. Now, there are certain things which we are supposed to be included in the transaction value. What are the things which we are supposed to include in the transaction value? Now, first one, they say that price actually paid or payable for the supply. Actually paid or payable. So that is what is the actual amount supposed to be payable to the seller or the supplier, that is to be taken into the consideration for the determination of the transaction value or a taxable value. Next, he says any taxes, duties, fees, charges which are levied under the any of the statute other than the CGST Act or SGST Act or a Union Territory GST Act or GST. That means we are not charging any taxes under GST, but other taxes you might be paying. What are the other taxes? Any taxes, duties, fees, like let us say, probably customs duty might have levied. Central excise duty now it has been included under the GST, but earlier central excise supposed to be payable. Octroi duties are to be payable. Municipal, like whatever the tax, sales tax, etc., which is to be leviable, all those now it comes under the GST. But other than this, any taxes, if it is paid, that tax is supposed to be included in the transaction value before determining the value to be assessable. Next, we have to discuss about payments to third parties. Any amount which is payable by a supplier to the third party, which is not already included in the price. See, sometimes a special request is being considered, like packing. What usually for a product, they have a packing into the account. But as extra special care which need to be taken care of, in such cases, they will instruct the person to pack specially. In such cases, the special packing, there could be some charges which is to be payable as an extra by the recipient. So in such cases, any payments to the third parties, like it can be like a donation on our behalf, this party might have paid some charity, some donation, something. Those things supposed to be not included earlier should be included. Why we are including is it is not related to the product, but the recipient of the person might have told us to pay those amounts on his behalf. That's the reason why those things supposed to be added. Next is incidental expenses. So the incidental expenses such as commission, packing, charged by the supplier to the recipient of a supply, including any amount charged for anything done by the supplier in respect of the supply of goods or services at the time of or before delivery of the goods or a supply of services. Incidental expenses. Now, these are like, let us say, a commission which is paid to an agent. So, which is not included in the price of the product, but it is an extra which is being charged. In such cases, that commission should be added. Now, packing, if I need to take into the account packing, usually for a product, it requires three types of packing: primary packing, secondary packing, a special secondary packing. Now, let us take the primary packing, like toothpaste. Toothpaste sent to the market with a tube. The tube is required. Without the tube, the toothpaste cannot be sent to the market. So that is a primary packing. But the tube, once the tube is there, it is not even sent to the market. It requires a carton. A small carton is required. Why? Because it has to protect the tube. So anything happens, like in during the transit, the tube can be damaged. That's the reason why it should be packed, taking the another carton into the account. That becomes the secondary packing. Now, the third special packing a third category of packing, which we say the special packing. That means it is the customer who has been requested the people to pack again. Already the packing is been done, but he'll give a special care and a special specification. Based on that, whatever may be the packing is being done, that is called as a special packing. Like we want to give a gift to someone, so we will request the person to consider a gift packing. That means it also have a packing apart from the primary and secondary. They may request to have a gift packing also to be made. In such cases, the extra charges supposed to be uh, borne by the receptor. So that's the reason why even that is to be taken into the account. The next, interest or a late fee or a penalty for a delayed payment of consideration. It is not one-time transactions which are being taking place into the account. Regularly, this person is supplying the goods, the other party was taking the goods. So sometimes he cannot pay the amount on time for which he is supposed to pay the interest. So that interest also need to be considered. Or they might have entered into some credit terms and conditions. In such cases, probably the interest, the value of installment, etc., may be taken into the account. Those things also need to be considered for the inclusion of transaction value. So it can be an interest or it can be a late fee, because once the time limit has been crossed, so he has to pay the late fee also. And the next, he also has to charge the penalty, so that penalty is also need to be taken care. So all this also, because these are above what we are supplying, in such cases those expenses also need to be included. The next, coming to the subsidies which are linked to the price other than the subsidies which are given by the state government or the central government. It may be given by only the manufacturer. In such cases, those things are supposed to be included in the transaction value. Now, when we are talking about this, the first we have to consider as one is price actually paid or payable for the supplier. Okay. The next we need to talk about exclusions of discounts from the transaction value. What are to be excluded from the transaction value? Here, discounts which are allowed before the time of supply as shown in the invoice. Probably that is being mentioned in the invoice. That's the reason why that need to be deducted. The next that is after the supply. That is after the supply in terms of agreement that existed at the time of supply or worked out invoice wise, the proportionate input tax credit which is reversed by the recipient. So all that is also need to be considered for the exclusion from the transaction value. So these exclusions are to be taken and it is to be considered. Now, let us discuss about a related person. This is very, very important, need to be taken care of, because we need to define who is called as a related person and whether that related person transactions should be added or included, excluded from the transaction value. So here, persons, the related persons may be either officers or the directors of one another business. That means I may be a director in your business and you may be a director in my business. Then automatically they are called as related persons. Now, legally recognized as a partners. Like I and you probably doing some business where there we are partners. So here we are doing a business and there we are the partners in that business. Then in such cases, they are called as a related persons. The next, as I told you, master and servant relationship. That means employer and employee. So the person who is having an employee and employer relationship, then they also called as a related person. Related person means need not be a blood relation. We talk about the business relationship here. Now, a third person controls directly or indirectly or holds 25% of voting stock, shares, or both of them. That need to be considered as a related person. Or you can say one of them controls directly or indirectly the other, like subsidies, company, holding company, like such companies if you have. In such cases, the holding company, subsidiary companies, automatically they are called as a related person. A third person controls directly or indirectly both of them. So both of them may be doing differently, but a third person is there. That means we may be subsidiary companies of so and so company. In such cases also, we will call it as, even though we doesn't have any business relationship, but we comes under the one other third party into the account. Definitely, we both will be treated as a related person. Such persons together control directly or indirectly a third person, or you and me, probably controlling the third party. Then, in such cases, also, we both will be called as a related person. Now, members of the same family, if both the persons are coming from the same family, then even then they are related persons. One of them is a sole agent, sole distributor, sole concessionaire, etc. Taking the other into the account, even they are also called as a related person. So this is how you have to take the valuation of supply and the value of supply is supposed to be determined. So all these need to be taken care of in case of the determination of supply. Now, coming to the next is, we are supposed to discuss about the tax deducted at source and the tax collected at source. So what is deducted at source? Now, usually what happens is, in case of goods, whenever the goods or services or both are supplied under the contract exceeding 2,50,000 rupees, that is first consideration which you need to take, where the tax can be deducted at source. The second consideration you have to take into the account is a department or an establishment of central government or the state government. So it can be the revenue department, it can be an economics department, or it can be insurance department, banking department, whatever may be such kind of departments where the supplies have been made. In such case, you can deduct TDS. Now, local authorities such as Panchayat, municipality, municipal committee, Jilla Parshad, district board, development board, etc. If you take the local authorities, if you supply anything to the local authorities, like let us say the road laying contractors who are dealing with this municipalities, so automatically whatever the payment is supposed to be made to them, they have to deduct the TDS, tax deducted at source, by these municipalities. It is a contract which is being given to the road contractor and the municipality. He has to lay the roads under the jurisdiction of the municipality which has been stated. So whenever the payments, expenses which need to be payable by the municipality to that contractor, what they will do is they will deduct the taxes and the rest of the amount will be paid to them. So the TDS can be made in such cases. Even some of the contractors deal with the government agencies relating to certain contracts. In such cases also TDS will be deducted. Such persons or the categories of persons as may be notified by the central or the state government on the recommendations of GST Council. So the GST Council will also recommend and state that whatever may be the category of the persons as notified by the government, they can be deducted tax at source. Now, what is the rate of tax which is deducted at source is 1% from the payment made to the supplier or credited to his account of the supplier. 1% of the amount. Now, TDS shall be deducted by the recipient of taxable goods or services or both, referred as a deductee. Now, the return shall be filed by the deductee of the TDS, which is deducted by him in the form GSTR 7. That is, Goods and Service Tax Return 7. In that, he has to file the return. Now, the supplier shall claim input tax credit for the TDS paid by the deductee. So, input tax credit shall be availed through electronic cash ledger of the supplier. Now, what are the provisions we have under the TDS? Registration of TDS deduction. Now, when you are supposed to deduct the TDS, you are supposed to be registered under the act. The act, the people says that you are supposed to, that means the government, the central government, the Board of Indirect Taxes, that is Customs and Excise Department, supposed to give that authority to you to deduct the tax at your place. TDS supposed to be done by you only after the board has been given you the power. So that's the reason why for that you are supposed to register yourself that you are eligible to deduct the tax at source. Now, TDS deductor has a compulsory register without any threshold limit. That means he doesn't have any limit at all. The deductor has a privilege of obtaining registration under GST without requiring a PAN. PAN is not required. He can obtain registration using the tax deduction and collection account number. He will be given as TAN. TAN means tax deduction collection account number, which is issued under the Income Tax Act 1961 or the indirect taxes also. Now, whatever the deposit of TDS with the government, what he has to do once he has deducted the amount, he has to remit it to the government. So the amount of tax which is deducted at source should be deposited to the government account by the deductor by 10th of succeeding month. So every 10th of succeeding month, that means we are in the month of May, we have deducted the tax. So what I have to do is, when I have deducted the tax now, today is the 8th, isn't it? So 8th May I have deducted, then I have a time up to 10th of June, which I should remit this amount to the government. So he has to deposit to the government account by the deductor by 10th of the succeeding month. So in the May I have deducted, like 10th of June, I'm supposed to submit or I have to remit it back to the government. That is what he has to do. The next TDS certificate, once I have deducted the tax at source, I need to issue a TDS certificate to the person to whom I have deducted the tax, because he has to prove that whether he is eligible to pay the tax or not. Once he has paid the tax, then probably he need not pay again. That's the reason why a communication is supposed to be given to the person from whom I have deducted the tax within 5 days of crediting the amount to the government. Once I have credited to the government, within 5 days, like let us say 10th of June, I might have deposited. 15th of June, I am up to issue this certificate to the person from whom I have deducted the tax. If I am failing to issue such certificate, I am liable to pay a late fee of 100 rupees per day. So, usually what happens is 15th June, I have to pay back the amount to the government. If I'm not doing so, I have to pay the penalty or a late fee, and that is 100 rupees, and it can be extended up to 5,000 rupees. So, whatever may be the late fee which I am supposed to payable, that can be charged from 100 rupees to 5,000 depending upon the case. The next TDS return also I have to file because I am deducting the tax. So I need to file the return. The return should be filed in GST, that is Goods and Service Tax return number 7 within 10 days from the end of the month. So they have to take into the account from the end of the month. That means May, if it is ended before 10th of June, 10 days, no? 10th of June, I need to submit this return to the authorities. Now, in any case, electronically, the common portal, if I take into the account, in such cases, I have to file form. Instead of filing the 7 number, I have to file it the GST return 2, which I have to supply because I have an electronically common portal into the account. So either of this I have to file. The next, whatever may be the consequences of not complying with TDS provisions. First thing is when TDS is not deducted. I'm supposed to deduct, but I have not deducted. In such cases, what we have to do is the interest supposed to be payable along with the deducted amount, which has been determined and recovered as per the law. Now, TDS certificate, if it is not issued or delayed beyond the prescribed period of 5 days, then late fee, which is to be payable from 100 to 5,000 rupees. Next, TDS deducted but not paid to the government or paid later than 10th of the succeeding month. In such cases, interest to be paid along with the TDS amount, else the amount shall be determined and recovery as per the law. Late filing of TDS returns, the late fee of rupees 100 for every day during which such failure continues. So, subject to a maximum amount of 5,000 rupees, any excess amount which is deducted and paid to the government, account shall be dealt for the refund. And however, the deducted amount is already credited to the electronic cash ledger of the supplier and the same shall not be refunded. The person who is eligible to deduct TDS at the rate 1% from the payment made or credited to the supplier deductee, the value of supply exceeds 2,50,000. It is not below 2,50,000, it is above 2,50,000. And the persons are, it can be established or a department of central and state government, local authority, government agencies. Such persons or a category of persons may be notified by the government on recommendations of the council. The next, TDS to be deducted only if the place of supply is within the state of registration. Where I have registered, there only I have to deduct the TDS. If I have registered in Maharashtra, deducting here is ridiculous. I should not do that. The next, the time limit, the deposited amount within 10 days from the end of the month, that is need to be taken care of. So this all is relating to the TDS. Now coming to discuss about the tax collected at source. Now, the tax collected at source here is like the electronic commerce operators like Flipkart, Amazon, etc. What they'll do is whatever the goods which they are dealing, they have to deduct the tax. No, so they have to collect the tax at the source. Means any person who owns, operates, or manages digitally or electronically facility or a platform for electronic commerce. Now, any network, a digital or a electronic network which they are using, they are supposed to collect the tax at source. Now, coming to the provisions of tax collected at source, first is payment of taxes. Now, if you take the payment of taxes here, normally the payment of taxes are required to be made by the supplier, but in case of services supplied through electronic commerce operator. So whatever may be either electronic commerce operator or not by the supplier, you have to take into the consideration. The next, here also the tax which is collected is 1% only. Returns to be deducted. See, whatever maybe we are returning the amount, that should be deducted, and it is not exceeding the 1%. Like here, example is Amazon electronic commerce operator has supplied shoes from a supplier Nike to various customers aggregating to 5 lakhs for the month of so and so July. Now further, it assumed that the customer have returned the goods sold in May, June, July. The value of the goods were 2 lakhs. Now, whatever the net value of the taxable supply of the product shoes is only 3 lakhs, because out of 5 lakhs, 2 lakhs were supplied, the 3 lakhs is left. So what the electronic commerce operator required to deduct 1% on 3 lakhs, which are supplied in the month of July, that is to be considered. The next coming to the registration. Now, e-commerce operators as well as the suppliers supplying the goods through an operator need to compulsorily register. They have to compulsorily register under the GST Act. The threshold limit, that means for them, the limit is 20 lakhs. And in case of special category states, it is the 10 lakhs. So it can be 20 lakhs or 10 lakhs. And it is being considered Now, under the section 24 of CGST Act, which is a mandatory for every e-commerce operators to get registered. Compulsorily, they are supposed to be registered. Okay. The next here, we have to take into the account the TCS monthly and annual statements. Whatever the amount which is collected by the operators required to be deposited by the 10th of the following month. That means May is the month, following month would be the June. So whatever may be the deducted, collected taxes in the month of May, they are supposed monthly statement, they have to fill the form goods, that is goods and service tax return number 8. Form number 8 it is. And the operator is always required to file annual statement, which is prescribed form, by the 31st December following the end of every financial year. That means in the month of December, they have to file the return. The operator can rectify errors in the statements filed if the latest return to be filed for the month of September following the end of every financial year. Like any mistakes has taken place, and if they want to file it again, that can also do so before end of every financial year. Now, whatever the details which are furnished by the operator in Form 8 of GST return shall be made available electronically to each of the suppliers in Part C, Form GSTR 2A. That is one more form we have, which is need to be stated in the common portal, electronic common portal, after the due date of filing of Form GST Form 8. So when we are filing the GST Form 8, it also needs to reflect in GST Form 2 under common portal. The next is time limit. As you know, the TCS, once it is deducted, need to be payable, deposited within 10 days from the end of the month in which collection has been made. Claiming of credit. Now, when you take the claiming of credit into the account, the supplier of goods and services shall claim the credit of the amount collected and reflected. The statement filed by the electronic commerce operator So whatever the claim, he has to uh, the claim the credit amount collected, and it also to be reflected in the statement which is filed in the common portal, that is called as the electronic commerce portal or operator. The next we will discuss about the differences between TDS and, that is, tax deducted at source and tax collected at source. Now coming to the tax deducted at source. Now here they have mentioned a specific purposes, that is certain establishments only can do TDS, whereas who can do the TCS. Now TDS can be done by either a department or an establishment of central or a state government or a local authority or a government agencies or a notified persons can deduct the tax at source. Electronic commerce operators can collect the tax at source. Now coming to the tax rate. Now TDS can be done only 1%, that is the payment which is to be credited to the supplier, taxable goods or the services to be considered there. Now in case of tax collected at source, there also 1% only need to be notified, that net value is on taxable supplies to be collected. Now the payment, if you take into the account TDS, once you have deducted the tax, it is to be submitted 10th of the following month. The same thing even under the TCS also we have to take into the consideration. Now under the TDS, there is a need to issue a certificate called tax deducted at source, and the time limit is also been given, the issuance of this certificate within 5 days from the amount deposited to the government, whereas such consideration or such issuing of certificate is not required under tax collected at source. The next coming to the filing of a return. Now under the tax deducted at source, the return can be filed within 10 days from the end of the month. And in case of tax collected at source, no such return is required to be filed. Only a statement as may be prescribed shall be furnished. So I also told you monthly statement or annual statement will be filed, but not the return need to be filed. But operator can furnish all these details in the form 8 and need to be submitted in the electronically, so that in the common portal the information can be seen under the form GST return 2A. So here there the return is required, here the statement is required to be submitted. The next they say that whatever the amount will be credited in electronic cash ledger. So under the tax deducted at source, whatever the amount was credited, that amount credited in cash, electronic cash ledger. Now under the TCS, whatever the amount which is credited in the electronic cash ledger, only it is being credited. So now today we have discussed about the value of supply. We have discussed about the TDS. We have discussed about TCS. So tax collected at source, tax deducted at source, the value of supply, the determination of the transaction value, assessable value, inclusions and exclusions, and what are the things which are required for the valuation purposes. So all these are the topics which we have discussed. Do you have any doubts relating to this topic? Any doubts, please? Any doubts? Let us, now the next topic will be the input tax credit. Tomorrow we will discuss relating to the input tax credit. So please go through what is input tax credit, who can claim input tax credit, any conditions need to be applied, who are eligible, how do we apply, how do we calculate input tax credit on capital goods, on inputs. All this, I think if you have studied in the fifth semester, please revise once again so that we will study in advance whatever we have apart from these things, whatever we are supposed to discuss relating to the input tax credit, that is also we'll study in the next class. Okay? Is that clear? Any doubts? So please refer to the rules from 56 to 58 relating to the importer, exporter, registered person, account of stock, registered person, tax collected and paid on input tax, names and complete address of supplies, proper officer shall determine the amount of tax, registered person, principal place of business, alteration of entries using the log books, serial numbers, every book of accounts under 50 under section under rule 56 sub rule is 9. Documents registers on any books is 56, sub rule is 10. Description, value and the quantity 56, sub rule is 11. So all these are the rules also are there. If you require any kind of clarification, please go through the rules relating to the GST, relating to the accounts to be maintained, and the next regarding to the now how a consideration is not wholly in money should be considered, need to be determined under rule 30 and 31. Related person we have already discussed, that is been stated under rule 28. Now under rule 29 about the agent, principal and agent need to be considered. The next is about based on the cost, 110% of the cost of production, which is stated under rule 30, or the residual method under rule 31, lottery, betting, gambling, horse racing, 100% face value of the ticket, face value of the ticket as notified by the official gazette, whichever is higher, which is stated under rule 31A, that need to be considered. The next, certain supplies like foreign currency, 1% of gross amount of Indian rupees, 5% of basic fare in case of domestic bookings, 10% of international bookings. Now coming to the LIC services also, if you take into the account, the taxable value is equal to gross premium minus amount allocated for investments. So this is how an evaluation is to be made for the determination of value. Gross premium minus amount allocated for investments. Now, single premium amount policies or the annuity policies, if we have, the taxable policy is equal to 10% of single premium charge. Other cases where taxable value is equal to 25% of premium charged and 12.5% of subsequent years. Now, even in the LIC services also, how to determine the value was being stated. So, please consider all this into the account for your examination. Anyway, right now I'm leaving. Tomorrow we'll meet again. We will discuss relating to the input tax and other topics. Thank you.